Well, hey friends, it's Kelly from the Early Childhood Business Made Easy podcast. Welcome to another episode. I am so excited that I can help you find a little more peace and control some of that chaos and clear some of that overwhelm. And hopefully, you are finding more of that time freedom lifestyle you so deserve. Now, today, my friend, we are going to talk about money. You know, you are bringing in revenue. Maybe your enrollment is high, maybe 85% or so. Families, maybe they're paying tuition on time and your bank account, well, it has money in it. But if someone asked you right now, are you actually making money or are you just staying busy? Could you answer them? Could you answer them with confidence? Do you avoid looking at QuickBooks because the reports, well, they overwhelm you. There are so many to choose from. I know. You're not sure if your pricing is right. You have no idea what your actual profit margin is. And when it comes time to making some big decisions, things like, should I hire another team member? Do I raise prices? Do I invest in that new playground equipment? Those are big questions. And sometimes we are often guessing based on how we feel, not on what the actual numbers say. And that guessing game, that's what's keeping you up at 2 a.m., wondering if you're actually doing what's right. Can you actually afford to keep the doors open long term? Is all of this even worth it? If that feels painfully accurate, take a deep breath. You're not in this alone. Every overwhelmed early childhood business owner and operator I work with, they are operating sometimes without that clear visibility, that financial stability. Sometimes they're making decisions in the dark and they are feeling constant low level anxiety about whether their business is actually sustainable. Others are feeling that too. You are not bad with numbers. You are just using financial systems designed for retail stores and restaurants, businesses where you can easily track cost of goods sold, adjust inventory, and scale up or down based on demand. And those systems, my friend, they don't work for our ratio dependent, licensing restrictive businesses where your biggest expense, it walks out the door every afternoon. And your revenue, well, it's locked into enrollment contracts, party contracts. You can't change mid-year or seasonally with issues to keep going. Sometimes those seasonality issues, they're just keeping your hands tied. Now, most financial advisors, well, they'll tell you, hire a bookkeeper, learn that accounting software, track every expense. But here's what I've learned in 30 years of operating preschools, play cafes, and enrichment programs. That advice is overwhelming and unnecessary for early childhood business owners who just need to know if they're making money and where can they improve. The early childhood business owners with the healthiest profit margins and the most financial peace, they are not the ones who've become expert accountants. They're the ones who've identified 5 to 7 key metrics that actually matter for their business model. And they built a simple CEO financial dashboard that they can review in under 5 minutes every week or every month, whatever works best for them. You don't need an accounting degree to understand your financial position, and you do have the option to have a simplified budget process, one designed specifically for early childhood businesses, and a dashboard that's going to track the metrics that actually predict profitability in ratio dependent, license restrictive operations. When you implement the financial clarity system built for how EC businesses actually work, you stop avoiding your numbers and you start using them to make confident strategic decisions. And that's exactly what we're covering today. The 3 strategies that help you know your real numbers and use them to improve your profit margins. Number 1, how to identify your 5 to 7 core financial metrics that actually matter for your early childhood business, not the 48 reports that come from QuickBooks that want you to track every single little detail. Number 2, how to build your CEO financial dashboard, one that shows you at a glance whether you're profitable, where your money is going, and what might need to change. And number 3, how to use your numbers strategically. Use them to make confident pricing decisions, identify profit leaks, and improve your margins without working more hours. So if you're ready to stop avoiding your finances and start using clear data to build a more profitable business, then my friend, you are in the right place because you cannot improve what you don't measure. The moment you identify those 5 to 7 financial metrics that actually predict profitability in your ratio dependent business and track them consistently, that's when you stop flying blind and start making those confident decisions that improve your margins without requiring you to become an accountant. And this is what separates overwhelmed operators avoiding their numbers from CEOs who lead with financial clarity. Now, you're not avoiding your finances because you're bad with numbers. You're avoiding them because the financial tools you might be using were designed for businesses that look nothing like yours. Most accounting software and financial advisors treat all businesses the same. Track revenue, subtract expenses, calculate profit. But here's what they miss about early childhood businesses. Your revenue is fixed by enrollment caps and licensing ratios. Whether you're a preschool, childcare center, play cafe, you have licensing dependent requirements that most businesses don't have. Your biggest expense, which is your payroll, well, it can't be reduced without impacting quality or violating those regulations. And your cash flow, it follows seasonal patterns that don't align with standard monthly budgeting. You're not struggling with finances because you lack discipline or intelligence. You're struggling because you're trying to use a one-size-fits-all system for a business model that requires specialized tracking. Now, CEOs, confident early childhood operators, they know that financial clarity doesn't come from tracking more. It comes from tracking what actually matters for your unique constraints. Now, here's a sobering statistic about small business financial management. According to a study from US Bank, 82% of small businesses fail due to cash flow problems. Not because they aren't generating revenue, but because owners don't understand their numbers well enough to make strategic decisions before those problems turn into a crisis. A study from the McCormick Program for Early Childhood Leadership, they found that 68% of early childhood program managers, directors, and operators, well, they couldn't accurately state their profit margin when asked. 68%. Even though most could immediately tell you their enrollment numbers and their team ratios. Now, this disconnect can be staggering. You're tracking operational metrics obsessively, but have no idea and have no visibility into whether those operations are actually profitable. CEOs who've closed this gap, they don't track metrics. They track the right metrics. And the research shows that programs with formalized financial dashboards, well, they have profit margins 40% higher. Let me repeat that, my friend. Profit margins are 40% higher on average than programs operating without clear financial visibility, simply because they can catch those problems early and they can make data-driven adjustments before small issues become existential threats. Now, there's a preschool owner in Oregon that came to us last year, completely paralyzed by financial anxiety. She was bringing in about $42,000 a month in tuition revenue. Her enrollment was at about 90% capacity. And from the outside, her business looked successful. But she had no idea if she was actually making money because she was terrified of her financial reports. She'd open QuickBooks. She'd stare at that profit and loss statement for 20 minutes and then close it, feeling more confused than when she started, and then make decisions based on hope rather than data. She was operating in pure avoidance mode, believing that if she just worked a little harder, filled some more spots, the finances, they would work themselves out. Now, everything shifted when she stopped trying to become an accountant and stopped hoping and started tracking just 7 simple metrics on her CEO financial dashboard. She identified her core financial metrics for her enrollment percentage, revenue per child, payroll as a percentage of revenue, occupancy costs or her expenses as a percentage of revenue, monthly net profit, profit margin percentage, and cash reserves. Now, the breakthrough came when she realized her limiting belief, and that was, I need to understand every line item in QuickBooks to know if I'm profitable. Well, that, my friend, is just not true. She just needed to track the 7 numbers that actually predicted financial health in her ratio-dependent, licensing-restrictive business. Now, within 30 days of implementing her dashboard, she discovered her real problem. And it wasn't enrollment, as you would imagine. It was her payroll. It had crept up to 68% of revenue. And those of you that have been working with me, you know I coach that a healthy payroll percentage is 50 to 55% for a preschool. And her pricing, it hadn't been adjusted in 3 years despite rising costs. She was afraid to raise her tuition in fear that people would leave. Now, that just is not the case. She raised her tuition by 8%, adjusted her teaming model to bring payroll down to 58%, and she renegotiated a couple of her supply contracts. Over the next 6 months, her profit margin jumped from 2% to 9%. She added 15% to her annual profit, and she finally had the financial clarity to make confident strategic decisions instead of anxiously guessing. Her weekly financial revenue, it now takes her weekly financial review now takes 10 minutes and she does it every Friday afternoon. And she can tell you her key numbers from memory because she finally understands what actually matters and what she needs to focus on. So today, she leads her preschool as a CEO, a confident early childhood operator who makes pricing and team decisions based on data, not fear. So, my friends, let's get going. Let's talk about how she did it, starting with the first strategy that gave her the financial clarity she had been avoiding for years. Strategy number 1 is I want you to identify your 5 to 7 core financial metrics. When you're operating without financial clarity, you're either tracking nothing, hoping ignorance will protect you, or maybe you're tracking everything, hoping more data will magically create understanding. You look at your P&L statement and you see there's like 50 line items, multiple expense categories, revenue breakdowns you don't fully understand. And oftentimes we walk away even more confused than informed. Maybe you avoid financial reports entirely. Maybe you're checking your bank balance occasionally and hoping there's enough to cover payroll. Without identifying which numbers actually predict financial health in your specific business model, you're either drowning in irrelevant data or flying completely blind. CEOs approach financial management differently. They identify the 5 to 7 core financial metrics that directly measure profitability in a ratio-dependent, licensing-restrictive business. Track only those numbers consistently and ignore everything else that's just noise and keeping you distracted. This falls under Profit Booster number 6 in our CEO Leadership and Profit Engine. This is cash flow management, Profit Booster number 6. And it's designed specifically for the unique financial dynamics of early childhood businesses where traditional financial metrics like gross margins or inventory turnover, those are completely irrelevant. Now, most accountants and bookkeepers will give you a standard P&L statement with 30 plus expense categories and tell you to review it monthly. But that approach is going to fail for early childhood businesses because you are not trying to optimize cost of goods sold or manage inventory. You are trying to balance fixed ratios, seasonal enrollment patterns, and labor-intensive service delivery. The core financial metric frameworks, it's going to give you the 5 to 7 numbers that actually predict whether your business model is sustainable. And they're all numbers you can pull from whatever accounting software you're using in under 10 minutes without needing to understand debts or credits. So action step number 1, I want you to define what your 5 to 7 core metrics are. Now, this takes about 20 to 30 minutes, but once you understand what you're looking for, it's going to go so much faster. Now, here are 7 core financial metrics you can include. Now, I want you to use the ones that are best for you, but again, here's 7 to get you started. Enrollment percentage. This is the current enrolled children divided by your licensing capacity. Revenue per enrolled child or per party or per program. So this is your total monthly revenue divided by the total number of enrolled children, number of parties, etc. Number 3, payroll as a percentage of revenue. This is a big one. Your total payroll expense divided by total revenue. Number 4, your total expenses as a percentage of revenue. So this is your rent, your utilities, insurance, consumables, all of that divided by total revenue. Then I want you to find your monthly net profit. So this is your revenue minus all of those expenses and payroll. Then this is one that's optional, your profit margin percentage. And this is your net profit divided by your total revenue. And finally, this is again, that's another one that's optional, but your cash reserves in months. I cannot stress how important it is for you to have some cash reserves. Now, I know that can be hard for some of you that are just trying to pay yourself or just get out of debt, but how many months of operating expenses do you have in cash savings? Now, if you're a home-based provider or maybe a small operations, some of these metrics might look different. Maybe you don't have a separate occupancy cost or your payroll calculation includes just you and one other person. If you're a larger program, you might track these expenses by classroom or by program to get a more granular insight. Either way, the principle stays the same. These 7 numbers tell you everything you need to know about your financial health. Enrollment percentage is dropping, then you have marketing or a retention problem. If your revenue per enrolled child is below market rate, you have a pricing problem. If payroll percentages are above 60%, you have a team efficiency problem. If profit margin is below 10%, you need to address either pricing or expenses. Now, don't make the mistake of tracking metrics you can't actually influence. So total revenue, for example, this is great, but it's not truly actionable. You can't just decide to have more revenue. Revenue per enrolled child is actionable because you can adjust pricing. Focus on metrics that point to specific levers you can pull that will improve your profitability. Action step number 2, benchmark your current numbers. Now, I want you to calculate where you currently stand on each of these 7 metrics or whichever metrics you choose. Pull your most recent month's financial reports from your accounting software, grab a calculator, maybe a spreadsheet, do the math. Now, don't judge the numbers, just write them down honestly. For example, that Oregon preschool owner I mentioned, her current numbers look like this: 90% enrollment, $467 in revenue per child. Her payroll, as I told you, was at 68%. Her occupancy costs were 12%. Her profit margin was 2%. And she had 4 months of cash reserves. Now, for a small operation, this might take 20 minutes if your finances are simple. For a larger program, or you have multiple programs, you might need a little more time to calculate everything accurately, but it'll be worth it in the end. The key is to get your baseline so you know where you're starting at and you can start measuring improvement over time. Once you have your current numbers, compare them to healthy benchmarks for early childhood businesses. So we coach your enrollment. A goal is to get it to 85% or above. Revenue per child at or above local market rate. Your payroll should be between 50 to 55% of revenue. Your occupancy costs should be below 15% of revenue. And that profit margin should be above 10%. And those cash reserves, my goal for you is to get at least 3 months of operating expenses. Now, the key here is not to compare your numbers to generic small business benchmarks. That includes restaurants, retail stores, service businesses. Early childhood businesses have unique financial dynamics: higher payroll percentages, lower profit margins, seasonal cash flow patterns. Use benchmarks specific to preschools, childcare programs, play-based businesses like play cafes, enrichment programs. Or you're going to think you're failing when you're actually in a healthy range for our industry. Now, once you've identified your core financial metrics and you've benchmarked your current position, you've created the foundation for financial clarity. Now, let's talk about how to track these numbers consistently without becoming a full-time accountant. And that leads us into strategy number 2. I want you to build your CEO financial dashboard. Now, when you're stuck in financial avoidance mode, you only look at the numbers when something feels wrong. When payroll hits and you're not sure there's enough to pay for it and cover it. When a big expense comes up and you're not sure if there's enough in the account. When tax season arrives. You're reactive instead of proactive. And by the time you notice a problem, it's already a crisis. Without a simple visual system for tracking your core financial metrics consistently, you are relying on memory and gut feeling to know if you're financially healthy. And that's a terrible strategy, my friend, for making pricing, teaming, or investment decisions. Financial clarity requires consistent tracking, and consistent tracking requires a system so simple that you're actually going to use it. Again, this is all still part of Profit Booster number 6, cash flow management, for those of you that are in our CEO mentorship program. You can go find that information there in the Preschool Business Blueprint. And unlike complex accounting dashboards that require software expertise, this is a one-page, well, actually 2, the one-page visual tool you can update in 10 minutes every week that tells you everything you need to know about financial health. So yes, it's one piece of paper, but front and back. Now, most financial advice, it's going to tell you to review your P&L statement and make decisions based on trends over time. But in early childhood businesses, P&Ls don't help those problems that develop quickly. A key team member leaves, a sudden payroll efficiency goes down, enrollment drops by 3 kids, and suddenly revenue per child, those calculations shift. Maybe a piece of equipment breaks, an unexpected expense hits. Your CEO financial dashboard is designed for monthly check-ins, or weekly if you can do it, that catch problems early, not to just review trends over time that arrive too late to prevent damage. So action step number 1, I want you to create your dashboard. Set this up initially using a simple spreadsheet. Maybe it's a Trello board. If you use Notion, a printed template, a Google Sheet, whatever it is, create 7 rows, 1 for each of the core financial metrics, or less if you have fewer metrics. Create columns for each week of the current month, or you can do it by month, plus a target column showing your goal for each metric. If you want, you can use color coding: green if you're at above target, yellow if you're slightly below, but not at crisis level, red if you're significantly off target and need immediate attention. Now, if you're a smaller operation, you might use a simple Google Sheet to update every Friday with your numbers from your bank account and your enrollment tracking. If you're a larger program, maybe it's monthly and you pull your reports from your accounting software and you transfer those numbers to your dashboard. Either way, the goal is to create a visual, at-a-glance tool that shows you immediately whether you're financially healthy or you're trending towards problems. So for that Oregon preschool owner, her dashboard showed, again, her percentage was in red. It was at 68% when her target was 55. Her profit margin, it was also in red at 2%. Her target was 10%. Those cash reserves, those were great. That was 4 months. She was targeting 3. Those 3 red, yellow indicators told her exactly where to focus her attention. Now, don't try to make your dashboard too comprehensive by adding nice to know metrics. 7 is the magic number, whichever ones you choose. This is enough to cover aspects of financial health, few enough that you are actually going to track them consistently and not get distracted or overwhelmed and not do it at all. If you add 15 metrics, you're going to stop using the dashboard within a month because it's too much work to maintain. Action step number 2, I want you to schedule your monthly money date. If you've listened to my podcast for a while, you know how much I believe in the monthly money date. Block time on your calendar every month as a non-negotiable. This, again, is your monthly money date, your financial check-in. It's your appointment with yourself. And during this time, update your dashboard with the current numbers. Note any changes from last week. Identify any metrics that might have moved from green to yellow or yellow to red. Now, this routine rhythm, it's going to keep financial visibility in front of you, and it's going to help you go through the months and know that you are profitable, or maybe you're not. But either way, you're going to be able to fix anything that might come up. Now, for a smaller program, this might mean checking your bank balance, counting enrolled children, maybe just doing some quick calculations. And for a larger program, it might mean pulling those weekly reports from your enrollment software. Again, it's not about the format, it's about the consistency. Now, don't skip your monthly money date, my friend, just because nothing has changed. Financial trends develop gradually, and the weekly rhythm or monthly rhythm, it's going to help you spot small shifts before they become big problems. Skipping even 1 month can mean missing the early warning signs that enrollment is softening or maybe your expenses are creeping up. In the Preschool Business Blueprint Module 6, we walk you through the complete CEO financial dashboard framework. It includes templates, target benchmarks by business, and advanced tracking for multi-site operations. But this 7-metric dashboard with weekly check-ins will immediately give you that financial visibility you've been missing. Now that you're tracking your numbers consistently, let's talk about how to actually use that data to make strategic decisions that improve profitability. So that's strategy number 3, use your numbers strategically. When you're operating without that financial clarity, you're making major business decisions, things like pricing changes, hiring decisions, program additions, equipment purchases, all based on how you feel, not what the data says. Maybe a parent complains about tuition being too high, so you freeze prices for another year, even though your costs have increased. You're feeling stressed about the workload, so you hire another team member without calculating whether the revenue supports the additional payroll. Those gut feeling decisions in early childhood businesses, they almost always hurt profitability because your emotions are responding to immediate pressures, not long-term financial stability. CEOs, well, they use their dashboard strategically to make decisions that improve profit margins without sacrificing quality or burnout. This is the final piece of Profit Booster number 6, cash flow management, and it's about translating numbers into actions so your financial tracking actually drives better outcomes instead of just creating awareness. Now, most business owners collect data, but they don't use it for decision making. They track metrics out of obligations, yet they continue to make choices based on intuition. In our early childhood businesses, that disconnect is very dangerous because your margins are already razor thin. Your capacity is fixed, and one wrong decision can push you from barely profitable to actively losing money. The strategic use of financial data, it's not about becoming more conservative or risk averse. It's about knowing which risks are worth taking and which decisions will actually move the needle on profitability. So action step number 1 here, I want you to create your decision-making framework. So for each of your core financial metrics, I want you to identify what does a healthy range look like for you? What specific actions are you going to take if that metric drops below a healthy range? And what's the threshold triggers for immediate intervention? So for example, if your enrollment percentage drops below 80%, your action might be to launch a referral campaign or maybe review inquiry conversion rates. If that payroll percentage rises above 60%, your action should be to review your team's schedules and identify efficiency opportunities. If your profit margin drops below 5%, then your action might be to evaluate pricing or maybe cut some discretionary expenses. Now, if you're a small program, your decision framework might be simple. If cash reserves drop below for 2 months, I stop all non-essential spending and focus on enrollment growth. If you're a larger program, you might have a more nuanced framework. So for example, if payroll in the infant room exceeds 65%, we review ratios, adjust schedules, and consider raising infant tuition since that room is having the highest team costs. Either way, the framework removes emotion from decision-making and it replaces it with clear, data-driven protocols. Now, your decision framework should include positive triggers too, not just those negative ones. So if profit margin stays above 12% for 3 consecutive months, I'm going to allocate 50% of the excess profit to cash reserves and 50% to deferred maintenance or maybe team bonuses. Now, this ensures you're using profitable periods strategically instead of letting extra money disappear into general spending. Action step number 2, I want you to conduct a quarterly financial review. Now, you should already be doing this. So beyond your monthly money date, there's our dashboard check-ins. I want you to schedule your financial review to your quarterly planning process, where you are going to look at trends over the past 3 months and make some strategic adjustments if you need to. So during this review, I want you to ask, what metrics improved and why? Which metrics declined and what's driving that? What's my profit margin trend? Is it improving, declining, falling flat? Do I need to adjust pricing, teaming, or expenses just to improve profitability? What's one financial priority I can do for the next 90 days? Now, for a small operation, this might be a solo review with your planner, your calculator, and 3 months of dashboard data. For a larger program, it might involve your bookkeeper or financial advisor in this quarterly conversation to get their perspective on trends and opportunities. The quarterly review is where you're going to make big strategic decisions, maybe annual price increases, major equipment purchases, team model changes, program additions or eliminations. This is part of your quarterly planning process, which you're already doing anyway. I just want you to have a financial focus while you're there. Now, don't use these quarterly reviews to beat yourself up about past decisions. Financial data is just feedback, not judgment. If a metric declined, figure out why and what you'll do differently going forward. Don't beat yourself up about it. Shame and guilt don't improve profit margins. Strategic adjustments do. This decision-making framework and quarterly review process is going to turn your dashboard from a passive tracking tool into an active management system that's going to continuously improve your financial health. And when you combine this with your core financial metrics and your dashboard check-ins, whether that's monthly or weekly, you've built a complete financial clarity system designed specifically for how early childhood businesses actually operate. So let's recap what we just covered. You identified your 5 to 7 core financial metrics that actually predict profitability in ratio-dependent, licensing restrictive businesses instead of drowning in 48 irrelevant accounting reports. You built your CEO financial dashboard that's going to give you at-a-glance visibility into financial health through simply weekly or monthly check-ins. And you've created your strategic decision-making framework that's going to translate numbers into action so you make confident pricing, teaming, and investment choices based on data instead of a gut feeling. This is what it means, my friend, to lead as a CEO, a confident early childhood operator, instead of avoiding your finances and hoping that everything works out. And this is exactly how you're going to stop flying blind and start building the profitable business you deserve with that time freedom lifestyle. Okay, it's time, friend, for our manifestation minute. So get comfortable, close your eyes, and imagine this. 3 months from now, it's Friday afternoon, and you're doing your weekly financial check-in. You open your CEO financial dashboard and immediately see that every single metric is green. Enrollment is at 92%, revenue per child above target, payroll at a healthy 54%, and your profit margin, it's at 11%. You know exactly where your business stands financially, and that knowledge doesn't create anxiety. It creates confidence. You're making strategic decisions about pricing, team, and program offerings based on clear data instead of anxious guesses. When a parent questions you about tuition increases, you can explain confidently that your pricing reflects the true cost of quality and care. When your team asks about raises, you know exactly what you can afford. And most importantly, you're sleeping soundly at night because you're not wondering if you're actually making money. You know you are, and you know exactly how much. That's what's possible when you implement financial clarity systems designed specifically for early childhood businesses. That's not just wishful thinking. That's what CEOs who've stopped avoiding their numbers and started using them strategically do every single week. Okay, my friend, here are 3 action steps you can take this week to start this transformation. Number 1, I want you to block 30 minutes off this week to identify and calculate your current position on those 5 to 7 core financial metrics. Don't judge the numbers, just write them down honestly so you know your starting point. This is your financial clarity baseline. Number 2, I want you to download the Financial Dashboard Quick Start template. It's the one that's accompanying today's episode. It's a simple spreadsheet that's going to walk you through setting up your dashboard and includes healthy benchmarks for each metric so you know what targets to aim for. Go find it at kellypeak.com where you find information about podcast episode number 167. And finally, I want you to schedule your first weekly financial check-in. I want you to have your monthly money date. Again, you can do this weekly as well. Block 15 minutes on your calendar right now. Make it reoccurring and commit to updating your dashboard. Maybe for right now in the beginning, do it every single week until you really have that routine down and then move to monthly. Consistency is what's going to create clarity. Now, here's some exciting news. We're launching the Profit Illuminator workshop where we're going to do our profit reset. That's happening this month. It's a live intensive experience. It's 2 days, and I'm going to walk you through building your complete financial clarity for the year. We are going to look at your numbers. We're going to build your purposeful profit plan. This is your strategic plan for improving your business in the new year. Now, if you want hands-on support as you implement everything we've covered today, this workshop, it's the first start. It's designed exactly for that. We're going to be opening up registration in the next few weeks. Keep your eye on your email if you're not on our list. Get on our list at kellypeak.com. Now, today's episode, if it gave you some clarity on how to stop avoiding your numbers and start using them to build more profitable business routines, well, then I'd love for you to subscribe so you don't miss future episodes. Stop flying blind financially. We are building a community of confident early childhood operators who are rewriting the rules together. Now, you started your early childhood business or you chose to lead one because you wanted to make a difference in the lives of children and families. And you can absolutely build a thriving, profitable program without needing an accounting degree or living in constant financial anxiety. Financial clarity is simpler than you think when you have the right system. Lead as the CEO you are, or maybe you're becoming. You've got this, and I'll see you next week.